On the ET Money app, we have a feature called as Portfolio Health Check, which anyone can use to get, well, the health report of their portfolio. It tells you the hidden risks that can bring down returns and possible opportunities that can make your portfolio deliver better returns. But why am I starting this video with this? Well, that's because one of the parameters we look at in this health check is portfolio overlap in the holdings of the user and give details of which funds are causing this. And that thing called portfolio overlap is what this video about. Portfolio overlap is a less understood, often invisible and serious threat to your portfolio. And today we are going to talk about this. Hello and welcome to ET Money's YouTube channel. Now, as you might have figured already, portfolio overlap happens when there is a significant match between the holdings of your funds. So while you may think you have invested in multiple funds and have a diversified portfolio, in reality, a large part of your money is getting invested in the same set of stocks. And that increases portfolio risk, because if that common set of stocks starts falling, all your funds will fall too. And it won't matter much that they are of different kinds. But why does portfolio overlap arise? And more importantly, what can you do to avoid it in your portfolio? We will answer these questions in this video. But before we answer these questions, here is a quick reminder. You are watching this video on ET Money's English channel. We also have a Hindi channel जहाँ पे आप ये videos हिंदी में देख सकते हैं. And we have a channel for investing beginners. It's called 5-Minute Finance. Do explore these channels. I've included their links in the description of this video. Now let's get back to the topic. Now there are two main reasons for portfolio overlap. Number one, SEBI's category mandate. And number two, AMC specific investment style. Let's first look at how SEBI's category mandate results in portfolio overlap. Now till 2018, there was no specific definition of where a fund of a specific category can invest. So you had funds that had large cap in their name but were putting a large part of their AUM in small caps. Then in 2018, SEBI stepped in and clearly specified the universes from which funds of each category could pick stocks. It was done to ensure uniformity in funds of the same category and ensure there were no surprises for investors. For instance, large cap funds now must invest at least 80% of their corpus in the top 100 stocks by market size. So when the universe were clearly specified, the chances of funds picking up the same stocks went up. And this increased the chances of a higher portfolio overlap. Now the table on your screen shows funds across categories that exhibit a sizable overlap. For instance, as of August 2023, more than 60% of the holdings of Bandhan Large Cap Fund and Union Large Cap Fund were the same. Notably, the funds mentioned in the table also gave similar returns, possibly due to the higher overlap in their holdings. Now, another related aspect is that the tighter the universe, the greater the overlap would be. At 100 stocks, the universe for large cap funds is really small, but it's comparatively bigger for mid and small cap funds. That's because, as per SEBI's mandate, mid cap funds must invest at least 65% of their portfolio in the 150 stocks after the top 100 stocks by market size. So the universe is 50% bigger than that of large cap funds. And of course, they can invest the remaining 35% of their portfolio the way they wish. Now, when it comes to small cap funds, they must invest at least 65% of their portfolio in stocks beyond the top 250 stocks by market size. Now, there are over 5,000 stocks listed on the stock exchanges, so the universe is virtually very large. Now, if we compare the portfolio overlap between the top two funds across these categories, we can assess the extent of overlap. As you can see, the degree of overlap fell from as high as 69% to 16% as we moved from large cap funds to small cap funds. So the tighter the universe, the greater the chances of an overlap. Now let's talk about the second reason for overlap, AMC specific investment style. Now AMCs often have an investment style. This investment style underlines stock picking in most of the funds of an AMC, and hence funds of the same AMC can display significant overlaps. Let's take the example of Axis Mutual Fund. Now, if you are an investor in Axis Mutual Fund's equity funds and have been concerned about the underperformance of several of them, portfolio overlap can help you understand it. Now, Axis follows a growth and quality style of investing. This philosophy underpins its funds, and as a result, quite a lot of its funds tend to have a high overlap. See the table on your screen. As of August 2020, there were 11 overlapping stocks in 5 of Axis' scheme. And these stocks had assets ranging from 25% to 54%. There were 29 stocks that were present in at least 3 schemes, and these stocks had a whopping allocation of 40% to 94%. Now, thanks to this overlap, Axis Mutual Fund schemes move in tandem. In 2019-20, they all outperformed the respective benchmarks. But in the last 2 years, they all underperformed the benchmarks. So if you had invested in several of Axis's funds, thinking they had been doing well, your portfolio today will not be in great shape as all the funds are now underperforming at the same time. This is a risk if you have high portfolio overlap. Now, it's not only that funds of Axis Mutual Fund exhibit overlap. It was also visible in India's biggest fund house, SBI Mutual Fund. There were 4 stocks that appeared in 5 of SBI's funds: Blue Chip, FlexiCap, Focused, Large and Mid Cap, and Long Term Equity. And these stocks had an allocation of 15 to 28% across funds. Now, as many as 35 stocks were common in at least 3 of these funds and had 49% to 71% of their assets across funds. Now, such a pattern can be seen even in ICICI Prudential's funds. There were 14 stocks that appeared in 5 of ICICI's funds: Blue Chip, FlexiCap, Focused Equity, Large and Mid Cap, and Long Term Equity. These stocks had allocations ranging from 38% to 60%. And there were 33 stocks that occurred in at least 3 of these funds. These had allocation from 58% to 84%. So portfolio overlap is not restricted to a specific fund house. It's quite pervasive. And if you have multiple funds from same fund house in your portfolio, there will likely be an overlap. Now the question is, how can you avoid this problem of portfolio overlap? Let's find out. Let me tell you some bad news. You can't completely avoid portfolio overlap. It'll always be there. What one should aim at is reducing it in one's portfolio. Now, you can't avoid overlap as there always be stocks common across funds. If a company is good, it's only natural that most funds would like to buy a piece of it, isn't it? Plus, there are other factors as well that result in an overlap. For instance, an attractive value stock will find a place in many value funds, and a fast-growing company will be lapped by many growth-oriented funds. If many funds are bullish on a particular sector or a theme or a pocket, the best stocks of that sector will naturally occur in many funds. So if you can't avoid the overlap, the next question is how much of it should be acceptable? Well, honestly speaking, there is no hard and fast rule around it. The lower the overlap, the better is for diversification. Still, if you would like to put a number to it, try to bring it below 33%. Now, to reduce the portfolio overlap, you can do 3 things. Number 1, invest in funds across categories in a structured way. Number 2, invest in funds across AMCs. And number 3, check portfolio overlap before investing and recheck it as part of your review process. Now, let's see these points one by one to understand how they can help. First, if you invest in different fund categories but do so without a structure, you will still end up with a high overlap despite having funds from different categories. Let me explain this with an example. Suppose you invest in the largest large cap, large and mid cap, and multi cap funds. Now, technically, you have funds from 3 different categories, so the overlap should be less. But that's not the case. As you can see on your table, the overlap between the 3 funds is quite substantial. Now, this happens because the investment universe of these 3 categories overlaps quite a bit, and so they end up investing in similar stocks. So you need to make sure that the categories you are picking don't have a big overlap in their mandate. For example, if you had picked the largest large cap, mid cap, and small cap funds, the overlap would be minimal with just one overlapping stock. Okay, now let's move to the second point, which is invest across AMCs. Now, when you invest across AMCs, the investment philosophy and the stock picking framework will change. That can also help reduce overlap. For instance, let's see the overlap in the top 3 FlexiCap funds. These funds have 6 overlapping stocks. The allocation to this overlapping stock ranges from 22% to 31%. So investing across AMCs can help limit portfolio overlap. Since the investment philosophy of fund houses is different, it is reflected in how they pick stocks and build portfolios. Third, if you cursorily check the portfolio holdings, you can see how many stocks are the same between the 2 or more funds. You can check portfolio holdings on the ET Money app or in fund fact sheets. For instance, if you check the holdings of Axis Long Term Equity Fund and Axis Blue Chip Fund on the ET Money app, we can figure out how many stocks are the same. You can focus more on the overlap in the top holdings as that is more consequential. Last but not the least, keep in mind that portfolios are ever evolving. So even if your funds have a lower overlap currently, it doesn't mean that they can't have a greater overlap later. For instance, consider SBI Blue Chip and SBI Focused Equity Funds. The assets allocated to overlapping stocks have gone up in these funds over the last 3 years. SBI Blue Chip Fund had an allocation of 21% to overlapping stocks at August end 2021. It now has 36% allocation to such stocks. For SBI Focus Equity, the overlap has risen from 34% to 46%. So it's essential that you keep an active eye on your fund's holdings and review them from time to time. The Portfolio Health Check tool on the ET Money app can help you check redundancy in your portfolios, so use it regularly. So this is what we had for you today. I hope this information will help you diversify your portfolio better. If you found this video helpful, don't forget to like, share and comment. And I'll be back soon with another interesting video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.